Hello everyone. In the last video we recorded for summary of chapter 2, we used this figure to discuss how the different business functions or processes are integrated in an ERP system to help business operations on daily basis and capture all of the related data accurately and timely. In the next two chapters, chapters 3 and 4, we'll talk about the production system using the job order costing or process costing examples. And in this chart, let's look for the production process, which is colored by the black. We can see production, we directly get all of the material or other resources from the procurement process or the supply chain management or from the upstream. And then once you finish the production, the products will be transferred to the sales function to be sold to customers. And in the meantime, the invoicing will trigger the financial accounting system to report the sales revenues and also the cost of goods sold. Ideally, we should also have some connection between the human resources where the labor will be planned to be added to the production process. So that's kind of like, a overall feel of how the production process is linked to other key business functions. And also we talk about the difference between financial accounting and managerial accounting. Almost all of the accounting data initially are captured in the financial accounting module. So we needed the production data to prepare the balance sheet and income statement, focus on the external users, such as the inventory data, right? So if you are manufacturer companies, we have raw material inventory, working in process inventory, and finished goods inventory. Those will be reported as assets in the balance sheet. Then in the income statement, we have one critical item, the cost of goods sold or cost of service. Is the item directly matching with the sales revenue, so we can calculate the gross profit. So the production data definitely needed by the financial accounting module. Also for the cost accounting or managerial accounting, we need the information from inventory data, cost of goods sold data, but we also need much more than the external financial statement items for internal analysis and reports, such as the detailed cost reports, like cost of goods manufactured, or cost of goods sold we learn in chapter 3 and chapter 4. The cost data, we also need to use it in variances analysis, performance evaluations. For example, when we compare the actual cost inputs with the budgeted data or planned data. And you also need the cost information to make a variety of cost forecasting, sensitivity analysis. So this part we rely upon breakdown of the cost into variable cost, fixed cost, or mixed cost. So the data for cost, we need a higher level of cost and more detailed about the cost data in the managerial accounting module than in the financial accounting module. So when we start to learn chapter 3 and 4, keep these points in mind because I don't want you to get lost on, too many of the detail like journal entries, which financial accountants definitely want to master those, but for managers or, as like a management use, we kind of focus on the general data, so more rather than the detailed ledger accounts or balances. like the one you need to report on the financial accounting side. So chapter 3 and 4, product costing, service costing. So when we refer to product cost, the focus is differentiate product cost from the non-manufacturer cost, or the period cost. Those will include your selling, general, and admin expenses. In chapter 2, we learned the differentiation between product cost and period cost is majorly for reporting purpose in the financial accounting because we want to know the cost that directly related, the relevant cost to make a product or provide the service, or like material, labor, or overhead for manufacturer settings, because those costs we need to allocate between the finished products and unfinished. So not all of the cost inputs will be reflected in the income statement because some of the cost inputs are still remaining in the production process. We only need to transfer the cost for the finished products and list them in the income statement. But for period cost, selling, admin, general expenses, including all of your research and development expense, will be there is no differentiation because all of these expenses are supporting the production functions. So all of the supporting expenses will be listed in income statement. There is no allocation between products or between products or the service, all of the period cost is deducted in the income statement. So that's kind of the focus for product costing and the period cost. I know when we mention this often, for most of the managerial accounting courses, we use manufacturing industry as examples. But the concept can be applied to the non-manufacturer setting and even for service industries. For example, if you work in the oil and gas company, agriculture, mining, you don't really make the products. So those products are mostly natural generated, right? So rather than you convert from the material into the final products, but you can apply the similar product concepts to those industries. Even for service companies, we can use the concept to work on the service cost, right? The direct service cost match with the service revenues, hotels, airlines. So we'll check a airline financial statement. You have all of your sales revenue from the tickets or services. We also need to match the sales revenue with the direct cost of offering the services. For example, the gasoline cost, the salary of the crew members, and other supplies in operating the airplanes. So those costs will be labeled as the cost of service. So that's your similar to the product cost we used in manufacturing industries. And then you also have your supporting expenses with SG&A for service industries. Okay, so that's like so in this chapter, if you read the ebook, you will see a main manufacturer example. Then you also see the application in the service industry. Some of the observations is in managerial accounting, especially in managerial accounting, the data when we try to decide the like material data or labor data, especially for overhead, there are lots of discrete. Not all of the data inputs are object. right? So like you say, oh, I can make sure 100% accurate and reflecting the real inputs. That's not the case. The accountants or managers exert many of their own judgments in allocating the cost or using different options in the costing system. For example, when you have different pricing for your material purchase, right? That normally happens. We have inflations, deflations, all the price up and downs. So when you apply the material into production, you need to follow a consistent costing system. So we call first in, first out, or last in, first out, or if you use average pricing for the material purchase. So those decisions will directly affect the numbers we put in the costing system. So in that part, when that's like we lots of the times we emphasize ethic behaviors for accountants and managers because many of the fraud or earnings management caused by managers or accountants using their judgments right to their benefits. So they want to leveraging on the options to present favorable data or ideas for their operations or the company's performance, but that may mislead the users or like the internal or external users. So offer misleading informations eventually in the reports. So that's like when you have the option to use different accounting to apply different accounting principles or options, we require the choices be consistent or for a couple of years before you can switch maybe to another method. So that's very important decision and documentation for the accounting function for auditing purpose and also for internal control purpose. Also keep those in mind, like the depreciation method you chose for your equipment or buildings. Or if you use straight line or accelerated depreciations in the company's annual reports before we present the financial statement, you must make a statement about the accounting principles or policies we choose, and those must be inconsistent with the GAAP or with the governmental policies. And now let's look for under the SAP, how many key processes in their production planning and execution function. We have the forecasting as the first process because without a correct or accurate forecasting from the sales, you couldn't really decide, right, how many units you are planning to make in the current accounting period or calendar year to satisfy all of the sales forecast. So this is also reflected in our budgeting system under the master budget. The first budget a company makes is always the sales forecast. And after the sales forecast, we can convert them into a operational plan because we also need to consider the inventory policies of the company, right? How many safety buffer we want to produce. So the production units won't be identical to the sales units. We need to adjust the beginning and ending inventory to convert a sales plan to an operational plan. So they call SOP under the SAP system. And then you have like a more detailed demand management. Okay, we have a broad idea for the units of production needed, but then you need to convert them into more detailed planning on the material requirements, labor requirements, and all of the overhead supporting planning. So demand management is something between the overall planning and more detailed material and resource planning. And then you can see we have a master production scheduling and the MRP. That's the bottom, like that's really give you a detailed material requirement plan for each type of material, the quantity requirements, the cost inputs. So that's like the most detailed fitting into your production orders. In chapter 3, we learned the job order costing system because these companies are made to customer orders. So the customer order is a cost object. We want to accumulate and produce the cost reports. And after finish the order, the company will move on to a different order, right? So the product order became a master data, which we can accumulate all of the related costs. And the next slide give a better or more like step-by-step presentation of the processes under the production planning and execution, and all of the different roles and functions involved in different stage of this process. Okay, so forecasting, SOP, and this is your strategic level, right? So like a more higher for looking forward. And demand management act as something from your strategic and detailed planning. Or detailed planning will get into the concrete resource planning in for each of the process involved in this procedure. And after the planning, we'll move to the execution stage, right? So you assemble all of the material labor with all of the support of the overhead. So manufacture execution, settling the order once all of the products are finished. And then when we actually acquire the materials, you will need the procurement, right, services for the materials. And this is another looping type of presentation. Okay, like for example, if you are making the like the beverage industries, right? So that's a more concrete idea, okay, for the steps and the resources we need in the whole cycling process. So you have the planning in the top, all right, scheduling and release, and then shop floor documents and good issue. The shop floor documents as your MRP, like master planning for the production, and a good issue. Okay, means of acquiring all of the material and the resources needed for the production. Compilation confirmation, and then send the products to the sales department. Okay, once it's finished, so good issue, that's the material issue, and good receipt normally refers to the final completed products. Order settlement, and then you go to another cycle. The master data, we're looking for database management. Okay, what type of master data? The general master data we must capture in the production process. We will have lots of different type of materials, right? Like thousands, hundreds. So looking for the real industry. I didn't account for aircrafts, but I read an article talking about if you make a car, a regular car need more than 3,000 types of materials, or large, small, to finally complete a car production. Okay, so we can see. And under SAP, the material is planned. They call bill of materials. Each unique product will have a unique BOM related. Even for the car, we know they have different models, right? Like hybrid, electronic cars, different modelings like a truck or sedan or SUV. So each product have a combination of materials, like they call bill of materials. And also, I believe our ebook mentioned, because BOM is a widely adopted master data in the ERP system for the material planning. And then for the labor and the processes, they call routing under SAP. So routing is like the steps or the processes needed. It can be very differently because we have parallel, the processes can be parallel to each other or can be assembly based, right? So depending on the steps for the products, okay, you need to design, like have the routing, another routing master data for the products. And under the routing, you will have a time planning, like under each process, how long the process will be, you have a planning for that, like under minutes or hours or days. So that's all kind of the standard expectations, okay, for the processes. And even the time can be like the running of the machine or the labor time, right? So that's, I'm thinking this part you will have the HR involved for labor time planning and release to make the products. And then you have the work center, which will be where we accumulate the cost, the process, and also the order, the production order. Okay, depending on you use job order costing system or process costing system, we'll have the cost object, different levels with the general ledgers or subsidiary ledgers. The cost object will accumulate the cost. Under job order costing in Chapter 3, each unique job order will become a cost object. So that's the master data required. And then this is an example of the BOM for the bicycle manufacturer. Okay, it's not all of them. I believe they have more than 25 or 30 different type of materials. So you can see very detailed the type of the material, the quantities, and even in the system, you should have a planning cost. Or sometimes we are not really using the actual cost. You are using a standardized cost for the material inputs. So BOM is a master data you already planned in your ERP system. So whenever you have a new production order involved, you will apply this BOM data to the units we actually produce for the special customer order. And this is a routing example to the other master data in making the bicycles. You can see they have different name and the different, so like the number for the processes involved. And you can see the time needed. And here is very short, it's on minutes. But imagine if you work on an aircraft or heavy industry machineries, you probably sometimes have months or days as required involved in the process. And this is a more detailed display for the routing data in the bicycle system. So you will see the routing planned in each of the work centers, or you can see the process or departments. Right? So it goes through different departments or process. And the work center, the name, the operational at the plant, because sometimes we make the products in different plants. And then the controlling key, okay, that's something especially for the sub operations. And the description for the routing, the qualities, okay, that's normally in minutes, okay, time and the unit of the measurement, and the activity type, These can be labor or can be machinery. Okay, that's the if machinery, you will differentiate it. Maybe it's overhead cost, or maybe direct labor or indirect labor. So that's give you the idea to add your labor data and overhead data into the system. And finally, in this video, this is the figure I copied from the book. Okay, so summary of the event sequence in the job order costing system. Okay, so you can see when we introduce in the book, it's not really specify we are using the SAP, but this is more like a general presentation of the sequential steps. So you can see we have material requisition, which will help you getting all of the resources. So BOM, right? Then the direct labor, like the routing needed, and overhead drivers. We need all of the supporting manufacturer expenses, depreciations, repairment, the inspection labor, supervisors, and all of the supporting overhead will be captured as in the system as well to the production order. One thing I already mentioned in the email is the overhead allocation is a key learning part in chapter 3. In contrast to direct material and direct labor, we theoretically we can use the actual cost. But for overhead, we use a predetermined overhead rate or estimated overhead rate to apply or allocate the overhead to the different production orders. Why and how? Okay, why? So keep this question. So why we couldn't capture the actual like insurance expense, actual property tax related to the manufacturer facilities, or the inspection cost. So why we couldn't capture the actual overhead and then allocate it to the different products? Timing issues and also fluctuations if you use actual data. So over time, like that's way people develop the predetermined approach to capture and allocate overhead. Okay, so I will talk about this allocation in the next video for more details. So the first video I'm talking about here is just to bring a overall comprehensive picture for the production process, and we'll get down to more details like all the journal entries and the cost reports, and then the overhead allocation in the next video using the chapter 3 slides. And you can see follow the steps. We have working process inventory. This is the place we capture all of the cost inputs. That can be your manufacturer facilities, like different department or process. And then once they finish, the products are moved to the finished good inventory. Okay, finish the goods inventory. And then finally move to the income statement for the units being sold to the customers. So cost flow. So as the physical units flow from the beginning to the end, for accounting system, we also make sure they are transferring in the right direction with the accurate data flow with the system. Okay, so that's the kind of the cost of flow. We'll elaborate more in the next video.